Imagine our world 10,000 years ago. There are no banks, no Wall Street, no credit cards, no crypto. They're just people and whatever they happen to keep under their beds. Now, let's say I'm just a regular person in this world. I have no money, but I make incredible coffee, the kind people would line up for. I want to open my own little cafe, but I need $500 to get started. So I look around my neighborhood. There's my friend Bob. He's the guy who's always grilling in his backyard. And I know he has some extra cash saved up. It's not doing anything for him right now, so I go to Bob. I say, "Hey Bob, can you lend me $500? If my cafe makes money, I promise I'll pay you back $550. And Bob thinks about it. Well, my money's just sitting in a shoebox. It's not growing, it's not doing anything, so why not lend it out and make an extra $50? That right there, that's Finance 1.0. It's super simple. It's just money moving from someone who has it to someone who can use it to create more value.
Bob earns some interest, I get to open my cafe, and people in the neighborhood get to drink delicious coffee. Everyone wins. That's the entire point of finance at its most basic level, helping money flow to where it creates the most value. But there's a problem with this model. Bob eventually runs out of money. He's just one guy. He can't fund every new cafe, every lemonade stand, every barbecue restaurant that wants to start up. And not every entrepreneur knows a Bob with a shoebox full of cash. So the world needs a better system. It creates a middleman, the bank. Banks gather up money from millions of different Bobs, and then they lend it out to millions of small businesses. They make the money flow efficiently. They spread out the risk, so if one cafe fails, it doesn't wipe out Bob's entire savings. And, of course, they take a cut for their troubles. Instead of hiding cash in shoeboxes, people put their money in banks to earn a little interest, and entrepreneurs go to banks when they need capital. That's Finance 2.0. Now, let's imagine a few years have passed. My cafe is doing great. People love it, and I want to expand. But my new idea, it's risky.
I want to invent a sugar-free, calorie-free, super metabolism-boosting coffee. It's something nobody has ever tried before. I go to the bank and they look at my plan, and they say, nope, too risky. Banks don't like big risks. So what do? I look for people who do like risk, because with big risks come the possibility of big rewards. These are investors, and they say something different. They say, I'll give you the money, but I don't want you to just pay me back with interest. I want a piece of your business. This is equity investing. Think about a real example. In 2004, an investor named Peter Thiel put $500,000 into a tiny social network startup called Facebook. Just 8 years later, that investment was worth over $1 billion. That's equity investing at its finest. High risk for an incredibly high reward. This is Finance 3.0. So you see the progression, from a simple handshake between neighbors to a loan from a formal bank to a high-stakes bet on a world-changing idea, from a shoebox to a bank vault to the stock market. Each step was a solution to a new, more complex problem, but the basic purpose never really changed. It was always about getting money from where it sits to where it can be put to work, to where it can build something new. So here's the problem. I can't go door to door looking for investors for my cafe. And investors don't have the time to search for every cafe owner with a crazy new idea. So we create another middleman. But this time, it's not a bank. It's Wall Street firms, investment banks, venture capital funds, and financial advisors. These people help businesses find investors. They help investors find opportunities. They package deals, write pitch decks, structure contracts, and make sure the right money meets the right ideas. And of course, they charge fees for these services. You can think of them like Tinder, but for money. This is Finance 4.0. Now, let's say my cafe becomes a huge chain. People love it. It goes viral on TikTok. Celebrities are talking about it. I can't rely on a few private investors anymore. I want everyone to be able to invest. So I decide to go public. This is when a company lists on a stock exchange, like the New York Stock Exchange or NASDAQ. Suddenly, anyone, literally anyone, can own a tiny piece of my company. A college student, a retiree, a delivery driver, a dentist. This is Finance 5.0, democratized investing. Through stocks, bonds, and ETFs, people at all income levels can now invest in the companies they believe in. After all these layers, what is finance, really? Here's the simple truth. Finance is just 3 groups of people. First, you have the people who need money: entrepreneurs, corporations, even governments. Second, you have the people who have money: savers, investors, and funds. And third, you have the people in the middle: the banks, investment banks, brokers, and advisors.
These 3 groups create a massive intertwined system that moves money where it's needed most and rewards people for taking a risk. It looks complicated, but the core idea couldn't be simpler. Let money flow to where it creates the most value. So where do you fit in? You might not even realize it, but you are already a part of Finance 5.0. If you put money in a savings account, you're a lender. If you buy a share of stock, you're an equity investor. If you invest in a mutual fund, your money joins with thousands of others to be put to work. When you borrow money, you're using the financial system. Use a credit card? You're participating in short-term lending. Buying a house means you're dealing with long-term debt markets. Finance isn't just something that happens on Wall Street. It's something that happens every single day between ordinary people, small businesses, and the institutions that connect them. So the next time someone says finance is complicated, just remember this. It all started with a simple question. Hey Bob, can you lend me $500? Everything else is just a more advanced version of that same moment.